Hello everyone. In this particular chapter we're going to study proprietary funds. Now we've studied all sorts of governmental funds, and that is when we are accounting for general government activities. Basically anything that's primarily covered through property taxes. Now proprietary funds are to account for what I'm going to call business type activities of a government. Business type activities of a government differ from general government activities in the fact that business type activities are primarily covered through user fees. So as an example, we can see that a proprietary fund could be a water utility department, or an airport, or a municipal golf course, or a bus system, or a subway system, or a train system, or a toll road. Those are examples where the users of all of these government functions pay an additional user fee above and beyond property taxes in order to use them. There are two types of proprietary funds, and as you can see on this screen, we have enterprise funds, which are the ones that I was just rattling off a few seconds ago. Enterprise funds, where basically the end user are the residents and the visitors in the community. That would be you and I. We use the toll roads and the bridges and the subway systems and the municipal golf course and the water utility departments. So really, the enterprise funds have external users. And the other type of proprietary fund is called an internal service fund. And as you can see on this slide, an internal service fund is when one department within the government services other departments within the government. Hence the term internal service. One department servicing others. We have a couple of examples here on this slide. As you can see, we have a purchasing department and an IT department, an information technology or an information systems department. If you really think about it, these departments exist solely to service the other departments. I've seen other types of internal service funds. A good common example would be a central garage, or maybe a central warehouse. Something along those lines where that one department is servicing the other departments. Okay, proprietary funds, they are reported at the fund level as well as the government-wide level. Proprietary funds at the fund level use accrual accounting. So there is no modified accrual accounting here. That is a good thing. They do use accrual accounting, and at the fund level they are prepared. And at the fund level we have a balance sheet, also known as a classified statement of net position. We have an operating statement, and that would be called a statement of revenues, expenses, and changes in fund net position. And lastly, believe it or not, we have a cash flow statement. And yes, this is the only place in the entire government where we are going to see a cash flow statement. At the government-wide level, the internal service funds are going to be included, or I should say the enterprise funds will be included in the business type activities column on the government-wide statements. The internal service funds, however, most likely would be included in the governmental activities column on the government-wide statements, with one small exception. If the internal service fund primarily services other enterprise funds, then they would consolidate in the business type activities column on the government-wide statements. That's the only exception. Okay, what I'm going to do now is I'm going to go through a sample journal entries dealing with an internal service fund and then with an enterprise fund. So first, an internal service fund. We have a supplies fund. So it looks like we have a central area in the government that is basically going to purchase all the supplies that any government department needs, and they will then subsequently sell those supplies to the using departments. So as of December 31, 2019, we can see that we have our trial balance, very simple. We have cash on hand, and we also have some supplies. And that would make sense because that is the main assets that this particular internal service fund would have. And then our equity is called unrestricted net position. Net position is what we call equity here. You are probably familiar with the governmental fund categories that we just finished studying, where we called equity fund balance. And if you recall, we had 5 categories of fund balance. But here in the proprietary funds, equity is called net position. And I'll get more into net position a little bit later on in the different categories. So this is our beginning trial balance. And during the next year, here are some sample transactions. And you can see that the supplies fund is the internal service fund. And at the same time, we would have the journal entry and the government-wide statements. So journal entry 1A, the supplies fund, they need to expand. Maybe they need to buy a new building or new equipment or whatnot, but they don't have a lot of cash on hand. So what the supplies fund decided to do is borrow money from the water utility fund, which is an enterprise fund, which we're going to see later on in this particular presentation. So the supplies fund borrows $130,000 from the water utility fund. So the supplies fund will debit cash and they will credit liabilities. We basically have loan payable. And it's an interfund loan because it's between 2 funds within the same government. It's not a liability to a third-party bank. We can see out of the $130,000 borrowed, $6,500 of it is due within the next year, and $123,500 of the amount borrowed is not due until greater than 1 year from now. Therefore, it is considered a long-term or a non-current liability. And at the same time, the internal service fund is recording that journal entry. We can see on the bottom half of this slide, journal entry 1B is recorded in the governmental activities column on the government-wide statements. We will debit cash, and the credit is going to go to this account called internal balances. And we're going to see that when there's interfund loans between a fund that would be reported in the governmental activities and a fund that would be recorded in the business type activities column on the government-wide statements, that loan receivable and loan payable is called internal balances. All right, this is just a term that is used at the government-wide level between interfund receivables and payables. All right, and so they could take that $130,000 that they just borrowed, and sure enough, they did need to go out and buy a whole bunch of fixed assets. So you can see in the supplies fund, they bought land and buildings and machinery and equipment and delivery equipment, and they paid cash for all of it. And down below, you can see at the same time that the supplies fund is recording journal entry 2A, you can see the government-wide statements is preparing journal entry 2B. Now, what you're going to see is these journal entries are fairly similar, and the reason for that is because both the internal service fund and the government-wide statements both use accrual accounting. So absent just maybe some category changes in assets or liabilities or whatnot, there are no other reconciling items. All right, and now the supplies fund and the government-wide statements, you can see this journal entry is the same, journal entry 3. They go out and they buy a bunch of supplies, and this is what we want the supplies internal service fund to do. So debit the asset supplies, credit the accounts payable. Now look at what happens. The supplies fund then sells the supplies to the using departments. And so it's a 2-part journal entry. The first journal entry, 4A, we're going to debit cost of supplies issued. You want to call this supplies expense, and that's totally fine. And we will credit the asset supplies. And at the same time, we need to record the sale. So the sale would be debit to this receivable account. And since it's an internal receivable, the debit goes to due from general fund, and we will credit a revenue account. And in this case, we're going to call the revenue account billings to departments. Don't let the fancy name of the account bother you or confuse you, the billings to departments is simply the revenue account. And then subsequently, after the billing, you can see journal entry 5, the supplies fund then collects from the general fund by a debit to the cash and a credit to the receivable. Journal entry 6A, we're incurring and paying for the expenses. And you can see journal entry 6B, pretty much the same journal entry, just the categories of expenses are a little bit different. But other than that, exactly the same. Journal entry 7, it looks like the supplies fund got a little operating grant, debit cash, credit grant revenue, and then immediately when we got the grant revenue, we spent it. So you can see journal entry 7B, debit the warehousing expense, credit cash. Now at the same time that the supplies fund is recording journal entry 7A and 7B, we can see on the government-wide statements fairly similar journal entries. Just wanted to point out with 7C that all grants are considered program revenues. Remember, that is a very important thing with the government-wide statements. We need to recognize, or I should say, we should need to report our revenues as either program revenues or general revenues. And as we learned in an earlier chapter, all grant revenues are considered program revenues. Journal entry 8, we're just paying our payables. Same journal entry on the supplies fund as well as the government-wide. Debit the accounts payable, credit cash. Now look at journal entry 9A and 9B. 9A, we are paying the current portion of the loan that we received from the water utility fund. So we will debit the loans payable and credit cash. And journal entry 9B, we can see that the next $6,500 piece, and I call this a graduation. We are graduating the next $6,500 out of the long-term liability and into the current liability. So we will debit the non-current long-term liability to reduce it, and we will credit the current liability, to increase it. And once again, at the same time that the supplies fund is paying down the loan in journal entry 9A, we can see the government-wide statements is recording journal entry 9C at the same time by debiting this new account, as I explained a few moments ago, internal balances, and crediting the cash. And next, journal entry 10A, it looks like it is a depreciation journal entry. We're debiting the various expenses and we're crediting the allowance for depreciation, which is the contra asset. This is exactly the same as accumulated depreciation, which you see in journal entry 10B at the same time that the supplies fund records 10A, the government-wide statements is recording journal entry 10B. And once again, if you take a look at them, they are fairly similar. Maybe just a couple of category changes, but other than that, it's exactly the same. And here are the closing entries for the period. Journal entry 11, we're going to close our revenue accounts with debits. We will close our expense accounts with credits. And the difference is $1,750. In a for-profit company, we would call this net income, but in government world with proprietary funds, we would call this excess of billings over costs. And then we will take that excess of billings over costs and ultimately closing it out to the equity account, which once again is called net position. And that's what we see in journal entry 12. So that's fairly simple, I think, going through an internal service fund. Now, the other type of proprietary fund is called an enterprise fund. And the difference here is with an enterprise fund, the end user are the external users. That's you and I who live in the community. All right? And once again, accrual accounting is used just like we saw with the internal service funds. They are reported at the accrual basis at the fund level and at the government-wide level. All of the enterprise activity would be reported through the business type activity column on the government-wide statements. All right, so I'm going to take you through an example of a water utility fund. There are some new vocabulary terms that I want you to know before we get into the actual journal entries, just so you can be intelligent as I'm using these account names. All right, first, accrued utilities revenue. All right, let me explain something, and I think you all understand this, but I just needed to put it into a picture for you. Where you live, I don't know if you're the one who pays the water bill or if someone pays the water bill for you, but in any event, when water service comes to your home, what you're going to see is the water billing cycle is not necessarily on the same calendar month, right? It's not necessarily the first of the month to the last day of the month. Let's just say, for an example, the billing goes from the 20th of the month to the 19th of the next month, and it just continues to do that. The 20th of the month to the 19th of the month. And that's totally fine. But what happens when you get to the end of the fiscal year, in my example, the 20th of the month to the 19th of the month, from the 20th of the month to the end of the fiscal year, so there might be an 11 or a 12-day period there where, because accrual accounting is used, we need to estimate the water usage our customers used up and basically accrue for that revenue in the current period, even though we're not going to bill and collect until the next period. Restricted assets is a big deal with enterprise funds. And if you think about a water utility fund, when new customers set up an account, the first thing the utility fund usually asks for is a customer deposit. For those of you that have set up water accounts, you probably remember, oh yes, that's right, I gave the water utility fund a little cash deposit. All right, so that cash deposit you gave them, they're going to keep in a separate account called restricted assets. Right? We don't want the cash for customer deposits commingled with the normal operating cash. So there's going to be a separate section on the balance sheet called restricted assets. All right, and then we have our fixed assets, which also include lakes, rivers, intakes, wells, springs, galleries, tunnels. As you can imagine, a water utility department, there's a lot of infrastructure that needs to be built to manage the flow of water throughout the community. And those are all assets. And then sometimes we have to bill our customers for construction projects. And if customers pay us in advance, we would have a liability called customer advances for construction. Right? And then, of course, we have the liabilities from the restricted assets. This is the customer deposit itself. We would establish it as a liability because ultimately, if all goes well, that customer deposit will need to be paid back to the customers. So that would show up as a liability. And then, of course, we have our various long-term liabilities as well. All right, so with that little vocabulary tutorial, now let's get through some journal entries. Okay, first journal entry. As I explained earlier, one of the last journal entries at the end of the year is to accrue for water that hasn't been billed yet but has been used, and we want to get that sale in the proper period. So if that adjusting entry is one of the last journal entries at the end of the prior year, one of the first journal entries of the current year will be to reverse that accrual. So journal entry 1, as you see on your screen, is actually a reversal of that accrued water. Reason being is because we're going to see when we go through our billing in July, we're going to bill them for 100% of that billing period, even though part of it was in the prior year and part of it was in the current year. So with this reversal of journal entry 1, the net between the reversal and the full billing later on this month, we will have the appropriate amount of sales recorded. Journal entry 2, if you remember from our studies a few moments ago with the internal service fund, the water enterprise fund actually lent money to the supplies fund. So what we're going to see here is the loans receivable, the interfund loans receivable, broken down between the current piece and the long-term piece, and the credit goes to cash. Journal entry 3, this is what I was talking about earlier. Now the billing comes. So we're going to do all of the billings to all of our customers, totaled $726,000. And as I said earlier to you, the main customer for enterprise funds are the external users like you and I who live in the community. However, the other government departments may be customers as well, and that's the case here. So we have sales of water. 696,000 of the sales of water was to you and I, and so the water utility fund will debit accounts receivable, and the other $30,000 was sales to the other using departments, $30,000 worth. Okay, so we do want to break up that receivable. The accounts receivable account is used solely for the external customers, and whenever we have an amount due from other funds, we would say due from. All right, journal entry 4, some of the customers are paying, so debit cash, credit the receivable. Journal entry 5, we bought some supplies, debit supplies, credit accounts payable. You can see the accounting is pretty simple, right? This is basic accrual accounting. Those supplies that we bought are now used. So we have the debit to the various expenses, but $66,000 of the supplies was actually used in a construction project. So we will capitalize that amount in the WIP account, work in progress, which is part of the fixed assets category. Journal entry 7, a whole bunch of expenses are paid in cash or accrued at the end of the period. No big deal. Journal entry 8, we are paying interest on a loan that we have. So we will debit interest expense, we will credit cash, and it looked like when we bought that debt or when we entered into that debt, it was entered into with a discount. So as you recall from your prior accounting classes, the discount has a debit balance. So as I make payments, I will amortize that discount balance with a credit. Journal entry 9, some of that interest is actually capitalized because it's part of the construction project. So we will debit or increase the WIP account, and we will credit the interest expense. This is a reclassification. Journal entry 10, the construction project is done. So we will debit the new fixed asset category called utility plant, and we will credit the WIP account to get rid of it. All right, journal entry 11, take a look at this one. Journal entry 11, what is going on here? There's really two things going on here. So with journal entry 11A, what we see is we have a whole bunch of customers that fell behind on their water billings, and we were attempting to collect, and we were pretty diligent trying to collect, and it didn't work. So what we did is we looked at all of the customers that had a customer deposit on account. All right, and so those customer deposits were used to offset the outstanding receivable. That's why we see a debit to customer deposits. Now, not all of the outstanding receivable was able to be covered with the customer deposits that were there. So the other amount we are actually going to write off. And we will write it off by debiting the contra receivable, or the allowance for doubtful accounts. In this example, we're calling it the accumulated provision for uncollectible accounts. All right, so these are customers that didn't pay, and they've lost their deposit, and we've written off the rest. Now, the other thing that happens here, although I can't show it to you in a journal entry form, but the other thing that happens here is the water utility department flips a switch, and guess what? The person that did not pay their water bill, they're going to come home, and they're going to realize that there's no water coming through their water faucets and their shower heads. So bad move on them. You never ever skip out on any debts owed to the government. Ultimately, you will be in trouble. All right, journal entry 11B. This is basically the good customers that have moved on. Maybe they closed their accounts and they were in good standing, and they are going to get their, they're going to basically get their, no, excuse me, back up. Journal entry 11B. Do you see this customer deposit here that was used to pay off, bills that customers haven't been paying and they've been aged? Well, that $2,140, since we utilized the customer deposit to pay some of the outstanding receivables, now that same $2,140 is now considered unrestricted cash that I can do whatever I want with. So the water utility is going to increase the regular normal operating cash account with a debit, and the credit is going to go to that restricted cash account. It's going away. It's no longer restricted. Okay, this is the one I was trying to talk about, Journal Entry 12A. This is the customers that have been good paying customers and they've moved on. Maybe they closed their accounts and they're just moving to another city, and so that customer deposit is going to be given back to them. So the water utility will reduce the liability with a debit, and we will credit the restricted cash. And lastly, Journal Entry 12B. These are new customers coming online. Brand new customers signing up for a new account. The debit is going to go to restricted cash, and I will increase my liability, my customer deposits, with a credit. So you can see there's a lot of moving parts with that restricted cash and that customer deposit, that liability account. And it takes a lot of effort to keep up on that because there's constant movement between current customers that aren't paying their bills, current customers that are moving out, new customers that are moving in. It's a non-stop activity. All right, Journal Entry 13. What we see is those amounts that the customers paid for construction. We are now able to recognize the reduction of the liability with a debit, and we're going to credit the receivable. The amounts paid above and beyond what was receivable, the credit is going to be recorded as a capital contribution. Journal entry, which is like a revenue, it's actually going to show up and it will be on the operating statement. Journal entry 14, all we're doing is paying some bills. So we're debiting the various payables and we are crediting cash. Journal entry 15, let me explain this. You see this debit to this account called payment in lieu of taxes? All right, one of the beautiful things about enterprise funds is they get to operate like a business, right? They actually provide a service. They have a billing department. They collect from customers. They basically sometimes make a profit. So it acts like a for-profit company. However, they're part of the government, so they don't need to pay taxes. However, what happens is they do usually make a payment to the general fund in place of or in lieu of a tax bill. It's like a transfer. So this payment in lieu of taxes, think of it as like a transfer account. It would be recorded in the operating statements, and this is called a pilot. If you take a look at the first letters in each of these words, P-I-L-O-T, pilots. All right, so whenever you hear a government finance official talking about pilots, this is what they're talking about. They're not talking about someone who flies a plane. All right, so we'll debit this transfer or this pilot and credit the liability due to general fund. Journal entry 16, it looks like we had some portfolio investments and we got some interest and dividends on that. So we'll debit the various cash accounts and we will credit interest and dividend income. You can see that the interest and dividend income needs to be allocated between operating cash and restricted cash. All right, journal entry 16B, that amount that was increased to the restricted cash account, what we're going to need to do is we will also update the net position, restricted versus unrestricted. And in a few moments, I'm going to talk to you about the three categories of net position. You can see two of them here, unrestricted and restricted. Journal entry 17, these are adjustments at the end of the period. We can see that we are depreciating our fixed assets, debit depreciation expense, credit the accumulated depreciation. We are also increasing the allowance for doubtful accounts. So we will debit bad debt expense, that's what this $3,980 is, credit the allowance for doubtful accounts. And last but not least, we are since we're at the end of the year, we're going to estimate the water usage from our customers that we haven't billed yet, but we will be billing in the next accounting period. And so we will debit this accrued utility revenue. This is an asset. It works kind of like a receivable. And then we will credit the water sales, which is the revenue account. All right, journal entry 18, we made some more investments. So we're debiting investments, crediting cash, and out of those investments, we can see that we have to adjust our net position categories again. Journal entry 19, the supplies fund that we lent money to, they are making their $6,500 payment. So journal entry 19A, debit cash, credit the current loan receivable, and journal entry 19B, we are going to graduate the next $6,500 into the current loan receivable with the debit, and we will credit the long-term loan receivable with a credit. This is the opposite journal entries of what we saw earlier in the supplies internal service fund. Here's the closing entry at the end of the year. Yes, I know it looks a little scary because it's very long, but very simply put, we will close out our revenue accounts with debits. We're going to close out all of our expense accounts with credits, and the difference goes to unrestricted net position. This is the equity account. All gets closed out to equity. Now, before I flip the page, let me just talk a few moments about the three categories of equity. We have equity, first of all, is called net position at the proprietary fund level. There are three subcategories of net position. You've already seen two of them. The first category is unrestricted, and that basically means we can do whatever we want with. Very similar to unrestricted, or I should say unassigned fund balance. Very similar. And then we have something called restricted net position, which I can equate to restricted fund balance. Is basically either some sort of law or some sort of third party is dictating what we can do with those funds. And last but not least, the third category of net position is called net investment in capital assets. And what this last category is, net investment in capital assets, it's pretty much this formula. It's pretty much fixed assets minus accumulated depreciation minus any debt that was entered into, any outstanding debt that was entered into to buy or construct those fixed assets. So let me give you an example. Let's say at the end of the period, we've got $200,000 in fixed assets. We have $60,000 in accumulated depreciation, and we've got $20,000 in an outstanding loan payable that was entered into originally to buy or construct those fixed assets. So your net investment in capital assets will be the $200,000 fixed assets minus the $60,000 accumulated depreciation minus the $20,000 loan payable. That equals $120,000, and that is what we would report in our net investment in capital assets in our net position. And journal entry 21A and 21B, what you're going to see is first we close out everything to unrestricted. This is kind of the order of things. After we close everything out to unrestricted, then we adjust the restricted and the net investment in capital assets. And journal entry 21A and 21B, it looks like that's what we are doing with various reasons. We have to reduce the net investment in capital assets with a debit, and the opposite side of the journal entry will be a credit to unrestricted. Same thing here with 21B. We had to increase the net investment in capital assets. This is because we probably purchased fixed assets. and the opposite side of the journal entry will be a debit to unrestricted net position. All right, so that is a nice little tutorial on proprietary funds. In summary, there are two types of proprietary funds. We have our enterprise funds, which primarily have external customers like you and I that live in the community. Accrual accounting is used, and at the government-wide level, the enterprise funds are reported in the business type activities column. And then we have our internal service funds. Internal service funds, as you can tell by the name of the account or the fund name, most of the users are internal users, and they would be reported using accrual accounting, both at the fund level as well as the government-wide level. And most likely they are reported in the governmental activities column on the government-wide statements, unless, with this small exception, unless if their primary activity is to service enterprise funds. Then it would be reported in the business type activities column at the government-wide level.